begin and go over 12.3 notes. All right. So again, I know it's going to be difficult for some of you that just getting back here and didn't see 12.1 and 12.2. You're going to have to follow along in the notes. I'll put the link on for that work together on there as well. This is 12.3 notes. We're continuing on. This has a lot of what we've done summarized onto some records. The second part's going to be a lot more just copying than anything. It talks about the payroll register. All right. And so what I'd like to do is just I screenshotted the payroll register so we could take a look at it. All right. So if you're looking up here at the payroll register, they have all these crazy numbers all over heck, right? And we'll skim through that fairly quickly. I have things highlighted below in the steps, but it's just to kind of make sure you understand these things. It's not so much this is a test question, so to speak, as it is just, hey, this is how you figured this out. So this part here should look familiar from last time. The employee name, marital status, and the number, right? Allowances. So the butler, Anthony, and Mary, they all have employee name, marital status, MRS, and number of allowances. This first part, regular overtime and total, we did in 12.1. We figured out their regular pay from the time cards. Overtime pay is time and a half times the hours worked. They worked over 40. And you get the total earnings from adding these up. So this is 12.1. Again, if you weren't here, you'll get caught up with it. 12.2 was doing the federal income tax, Social Security, and Medicare tax. So we've done this part as well. Okay. Now what we're doing is we're going to talk about health insurance, retirement plan. A variety of different things. Now, if you recall from when we talked about retirement plans, some retirement plans are before deductions and some are after taxes. Okay, before taxes, after taxes. These two examples are going to be done with employees choosing a variety of different levels and types of insurance for this pay period. This is incredibly low numbers. I don't know what they're doing, but whatever. Okay, everybody's is a little different. And in my type of company, in our school, everybody, it doesn't matter if you're 26 or 66, your insurance is taken out before taxes and it's all done the same amount. You know, it doesn't matter. You're put into this ginormous group and they try to keep costs down by including as many people as possible. Retirement plan, there's some that are considered to be done before taxes, so you lower your tax base, but then you can't touch it until later on, and if you do touch it, there's a penalty. These are called the 401 Roth. If you remember, we talked about a Roth, an IRA, okay, not a 401, an IRA, where it's done, you're putting it into a savings plan after taxes. So that means you've already paid tax on this money, you can take it out pre-tax, and then you don't have to worry about it, okay? So there's different ways of doing these things. That's all we're saying. But what we have, if you can see, this section says deductions. And so all these deductions, federal income tax is your sheets, married, single, 1, 2, 3 allowances, whatever. Social Security is the 6.2%, 1.45. All these deductions, including health insurance and retirement, that's why I don't say taxes, says deductions. All these are added up to get a total. This total, we said, is total earnings or gross pay. If you remember, gross pay, G comes before N. We've talked about this in variety classes. So this is money you make before deductions. And then the net pay amount is your total earnings minus your total deductions to get net pay. And net comes after gross pay, which is this. Okay, so net pay is after taxes. These checks are just the ones written out to each employee. So we will have a semi-monthly pay period that we'll have to write up there. We'll take the information from 12.1, put it on there, We'll take the information from 12.2, put it on there. They'll give us which employees are choosing what health plan, what retirement plan. You'll have to add these deductions up, and you have to subtract them from your total earnings to get net pay. And this is called the payroll register. Okay. So what's the payroll register? Summarize the earnings, deductions, and net pay for all employees. That's what we just talked about. We just explained the payroll register. Summarizes all the employees' payroll, earnings, deductions, and net pay. Okay? Now, I have a ton of stuff. So all these steps, I highlighted some things. We'll go over it, but not these highlights do not all mean they're asked of you on a test, other than you got to complete it. But we do want to talk a little bit. There's a lot of different things with state and local taxes, governmental taxes. These change from place to place. Some places have local option sales tax. Some taxes are bigger. Some have more road taxes. You're not trying to get too political. There's some towns are going to have more tax than others. You live in, like a New York, Chicago, LA, anywhere in California, there's going to be more taxes. So there's a variety of things. So that's why we don't talk about local and state taxes in this book. Okay. Again, you do not need to highlight these. These are just high notes I'm going to just briefly mention, and I've already done it. You're talking about the employee name, marital status, allowances. We talked about that already. Regular overtime total earnings need to be included in there. You're going to figure out the tax. You need to make sure that the Social Security does not exceed the Social Security tax base. We talked about that a little bit. Reminder from last class. Health insurance premiums are $70, they said, for this one employee. She offers these different premiums. They take them out of their check. They're set by insurance companies. We kind of talked about that. They're weird that it'd be 25, 70, 40. It's more like 650, $700, whatever, a month. So whatever. Anyway, doesn't matter. They've decided this one employee, Mr. Butler, is taking $80 out for his IRA, meaning he will take it out of his check. It's already been taxed, so then he can use that money whenever he wants. How do you get total deductions? You add up all the numbers. I highlighted it, but you kind of understand that, hopefully, from what we talked about. You will need to know what net pay is. And again, from our chart, net pay is all the money you make, total pay or total earnings, minus all the deductions, right? Determining net pay for each employee. Total earnings paid after taxes and other deductions is called net pay. So hopefully you understand what net pay. You subtract the totals from these columns to that. Total earnings minus total deductions, net pay. Again, they're just talking about it. Now, there's a couple different ways to look at it. So net pay for each employee should be this number, total earnings minus total deductions. But then you can also add up the total. We're going to add up these columns. So you're going to get a total column here of $8,076.75 minus the total column here of $1,806.88 to get net pay. And that will prove that this number you got you found is correct. That's what they're talking about there. Total earnings, this is the column totals. Again, nothing earth-shattering, okay? Payroll checks will be written. What we'll do is they will take the net pay, $6,269.87, from a general account. They'll pay it into the payroll account, and then they'll cut checks from there. Another safety guard, so that I'm not paying people by accident, more money, and then they give, you split it. So you take this net pay amount should be paid to the payroll. They pay it off, and that's all that is. Okay. All right. Next thing we got. Here's a screenshot of what we're looking at next. This is what we just talked about, the payroll register and all the different deductions, earnings, and net pay. You're going to take some information from the directions. They're going to tell you what quarters ended. So you got to figure out quarters. January, February, March is quarter one, right? 3 months. 12 months a year divided by 4, so every 3 months is a quarter. We are getting paid from her company semi-monthly. So twice a month we get paid, okay, for the whole quarter. Second quarter then is April, May, June. Third quarter is July, August, September, okay? So we will be filling out, depending on where you are in the pay period, we'll be filling it out and putting it across in the record. Again, employee name, Social Security, rate of pay, marital status, position. You're just going to type this stuff in. The employee earnings record for each employee basically is done from the payroll register. Now, again, we're learning accounting, right? In real life, this stuff would just automatically update into the next spreadsheet. What we're going to be asked to do is you're going to be asked to make a payroll register, and then you're going to copy all these numbers from regular pay, 132, all these numbers. You're going to copy them into the employee earnings record. The only different one is accumulated earnings. Okay, and we'll talk about that. Accumulated earnings is all the money they made up to that point before taxes. So then you add total earnings over here to get the total accumulated earnings. Accumulated earnings plus total earnings gets you accumulated earnings. Okay, the common mistake is accumulated earnings plus net pay. Well, that's not right. It's accumulated earnings plus total earnings. So really, the first part is the biggest part, filling out the payroll register. And then you're just going to copy it down, and then you're going to take total earnings plus accumulated earnings to get the new one. You got to put the heading in there as well. Okay. It has all these steps. I'm not going to walk through them as much again, but we do want to go over a few things. These reports have to be done. They're required by the government. They always want to keep track, make sure you understand that different states, different towns, different rules. Okay. But for the most part, we're trying to make sure we understand why we're doing this. You're doing it for tax purposes, for reporting purposes, and also to see if anyone's exceeded the tax base. A lot of our job really don't, because we're all getting paid hourly, so no one's getting paid hourly, making 106,000 usually, very rarely. So that's why it is. Okay, unless you're in trade. A business form used to record details of employee earnings and deductions. That's what we just talked about, employee earnings record. Okay. I just highlighted this. This is just to kind of remind you again, different things or different retirement plans are available. 401k is named after an IRS Internal Revenue Code. Government employees have things called like 403Bs, which we can contribute to our fund pre-tax, and then our tax lowers. It's just a reminder. Again, all these steps that we just talked about, you're going to copy everything you did onto here. You're going to take accumulated earnings from the previous period, add it to total earnings to get your new one. That's what they're telling you in all these steps. Accumulated earnings from the previous period plus total earnings from this period give you accumulated earnings for the total time. Again, they're reinforcing the idea that Social Security taxes are not owed because we haven't exceeded the first $106,800 worth of earnings. They keep talking about how you figure out net pay. We talked about it already. So kind of self-explanatory. Okay. We'll go over it together with work together. That is all we have for 12.3 notes.